Hey guys, hope you're having a great weekend. In this video, I'm going to hit on BTC. So Bitcoin update. I've been kind of leading with crypto lately. I want to do a couple teaching things longer term on this Bitcoin move. I got the features chart up over here. And then I'll talk a little bit about Friday's price action on S&P, Nasdaq, how we day traded it on the prop side and on the with my coaching group. And then I'll just briefly hit on global macro, big picture, where we kind of settled Friday. And then just maybe hit on some alts and some other stuff in crypto. So just probably two things I'm going to teach on: big picture, a couple items, and then kind of how to day trade some of these cycles intraday and what that looks like. So I'll just start on BTC and I'll come back to equities. So I kind of touched on our crypto group, what the crypto team, to not be shy taking profits up here. And some of you are still kind of struggling with how to take profit, and you should have profit take rules. So there's hours you could teach on selling and taking profits. A lot of traders struggle with what they call snatching at gains. So usually that comes from a state of being fearful. So they're not comfortable in being in negative territory. And then when they are in the money or they actually have some profits to take, they snatch at those gains instead of letting them run. And that's usually coming from just a state of fear of losing. And that's the opposite of the FOMO, which is people don't sell and they kind of fall victim to this idea of, oh, it's going up, I'm going to hold it. And you really lose out on the compounding effects of trading around a core position. But there's ways you can eliminate that psychologically. And so the answer a lot of times in trading isn't black and white. It's not yes or no, or what we call absolute. It's the same way you evaluate economic data. It's not so much is the number good or bad, or is the number getting better, or is it getting worse? And so there's a gray area a lot of times in trading, and it's all relative. It's not absolute, it's relative. So the answer isn't should I sell up here, take it all off. I've heard stories, even guys that I used to trade with. I had a mortgage trader call me up, and when we were down at Bitcoin at 3,000 and 5,000, he was asking me if he should buy. I said yes. And then this year I asked him, how's your BTC position? I was like, please tell me you bought. He was like, I did, but I sold it all at 9,000. And that type of thinking of you have to sell everything is just the wrong thinking. First of all, you never want to sell all of your long-term positions in something like Apple, something in Amazon, something like Bitcoin. There's times where you want to gross up your exposure, get heavier with your size. There's times where you want to trim and take some off. It's called planting and pruning. And yesterday and this week we're back at levels where it pays to take some off. So last time we were up at, what I have drawn here is one standard deviation regression channel. You can draw these on different charting packages or services. But this is just math. There's a rule of, in statistics, there's different rules around what they call the 3 sigma rule. And that's when you look at a data set, and just draw this real quick. I haven't talked about this in a long time. But in statistics, the 3 sigma rule basically says that the majority of distribution of whatever data set you're looking at, or in this case, X amount of price action over a time series, and the majority of that price action or that data is going to fall within, not the majority, it's something like, I'd have to go back and look at the percentages for one standard deviation. Then when you move outside the 2 standard deviations, you even have a higher percentage of data, right, falls within that subset. And then by the time you get to 3 standard deviations out from the mean is right in the middle. You guys might have to look up the 3 sigma rule if you want to study this more. But so this is 1 standard deviation, and it's defined the trend pretty well over this long term. Okay, when you go out to 2 standard deviations and then 3 standard deviations, you start to get to what they call the wings, and it's really difficult for price to stay above an outside of a 3 standard deviation move. You can go 6 standard deviations. I've seen times in the market where we've gone 9 standard deviations, right? But the price doesn't stay there for long. And it's not really about having to predict where you're going to go or what's the magical amount of sigma distribution. The point is that we're using math to define the edges. And so this is why this was a good edge here. And this is why the market naturally kind of found support. And so these kind of mathematical phenomenon, cycles, math, it's all kind of one and the same. So this is why we use regression channels. But the point is, when you get up here, if you take some profits, you want to stay long and let the market take you out of this trade. What that means is I'm going to be bullish and long a good amount of Bitcoin until the trend breaks down. Well, you wouldn't break this long-term trend unless you got back below 30,000 at this point, which is really, I'll tell you why I don't think you're going to get back below. I don't think you get back below 35. But yeah, so if you lightened up here, there's people that chased and bought the highs here because they're not trained or just have a bad process or no process. And then they either stopped out or got nervous on the lows when this is actually where you're not supposed to be panicking, but you're supposed to be buying from the people that bought here and then sold. I'm happy to take that pain off their hands. So when you lighten up, that gives you the flexibility and the optionality, and it makes it easier in your psychology to buy some back. So that's why we do what we do as far as trading around the position. Now, when we look at the more, if we look, I'll look at the cycles here in a second, but I don't think price is going to be very easy to get back below 35, 40,000. So this candle means a lot to me, okay? That bar is what I call a real money candle, a real money bar, and that it takes real amount of capital to create that size of a candle. And so we had this orderly pullback, which is a good sign of the bull market. And then we tried to rally and then we based. And this quiet congestion right here is what some traders will call a cup and handle. You can put different names around it, but it's always the same type of flag or a consolidation that happens. And when you put this candle here outside of a base like that, and you made a new high, and then you close the bar above this high, complete control by the bulls. All right. And then notice too that this climb, this rally that's been going on, is a well-defined, constant walk up the stairs. This isn't a blow-off acceleration like something like Binance just had yesterday, where it just goes completely vertical. And we've had times where BTC does that. And one of the easiest ways you can kind of just view that is just notice the price action and the angle. I talk a lot about angle and distance. This angle is at 2 o'clock. Vertical moves go vertical. And you can also look at the distance between the 8. I'm not saying this move was that vertical, but you can even see here, you're 4, 5, 6 bars up, and then you start to create angle and distance from the 8. We don't really have any type of huge amount of angle and distance. Now, from here, this is the daily chart. If price gets through the standard deviation and we go to 2 standard deviations in a straight line, and then you start to see angle and separation before the 8, that's going to raise the probability that we have an intermediate term top. Especially, we went up through 50, the market closed well. If it just accelerates towards 100,000, that's going to be a very high probability place that you're going to get a blow off top, at least for the intermediate term. We don't need to make the call longer term that it's going to go back to 50. If you go to 100, can you go back to 50? Sure. If you go to 100, can you go back to 20? Sure. You don't have to make that call. I think this is a new longer term bull market, and there's such a wave of institutional money that this isn't a retail blow off top that's going to do a GameStop 80% retrace or retrace like we had in 2017. But you could still have the 30%, 50% retracements. So anyway, we can trade that as it happens. I'm just saying from here and whatever this next move is, if it's outside of 1 and it goes to 2 or 3 standard deviations, you need to look for this angle and distance to change. And that's going to help you time your sales. All right. So don't be afraid to take profit, but we still want to keep our core long. And then we'll add back on the pullbacks. I guess that's what I wanted to say from a price perspective. When I look at the cycles, it's not a whole lot has changed since last week. On the monthly level, you can see now, you can see in the monthly chart, this is a little bit more of that angle and distance I'm talking about. Look how far we are from the 8, right? And this is where we broke out from this pattern. 1, 2, 3, 4, 5, or five bars up from that breakout. And then when we go to the weekly chart, I think this is a 13 weeks up matters. Okay, there's angle and distance on the weekly. Not huge, but again, I think next week, the rest of February into March is going to be pretty pivotal. This was a pretty, again, you can see this is just kind of a pretty clear consolidation, right? And that we broke out from. So this whole area is going to be tough to get back below. I guess I didn't follow up my point about when I was looking at that daily chart and we circled that real money candle on the daily, that whole area is going to be tough to get below. So it's the 8 here on the weekly, 40,000, 35,000. This whole zone is going to be tough to get back below. And even this 50 is going to be the first challenge for the bears. There's going to be buyers that now wanted to see if you could get through 50. We're through. You had some good daily closes. You got a weekly close. There'll be buyers now, which was resistance will be support, at least most likely the first time down. We'll just look at the daily cycle. We already had that up. So we were 8 days. This is finished the week out on the half cycle of a 4 count. So maybe we have another 4 days before we have a near-term top. And then watch this 8. Again, the 50,000 level is right at the 8. That's what we care about on the downside into next week to set the early tone. And then you got room for another 4 days up just on the 8.6 count. I went over that last week. If you want to look at the other videos, I teach more on that. Yeah, I don't know. That's all I want to say on Bitcoin. I'll get to some alts in a second. So on the near term, I'll show you guys what we did in the prop team. So we have, if you're new to us, or maybe you followed me for a while, but it's jenkinscm.com is our website. And my background's on the institutional, in the bond world, trading treasuries, running a few rates desks. And now I have a CryptoEdge membership. Some guys that are trading full-time day trading. We work with a firm out of Chicago to help traders get funded if that's something you have the time to do for and the commitment. But if you're looking for just an edge in crypto and we'll follow our directional model and our cycles, I don't see a whole lot of people do cyclical analysis and don't really bring it all together as far as trading psychology, risk management, as far as how to work size, work positions, all that high level professional trading. We bring that into this crypto team. So that's that. If you're interested in the blockchain stuff, and then I'm still running this trading package. It's essentially, I don't have any coaching or mentorship offered in this right now. I made a big push about it to start January, and so I figured if anybody that wanted to do that had their chance. But if you still want to learn the model, whether it's how we trade Forex or you're interested in some of the cyclical concepts, this is our institutional model that we traded with all the primary dealers and hedge funds that that were trading. It didn't matter really the market. We had oil traders we covered, a lot of treasury guys, obviously. And then even my options course and how we not only use the model and their timing concepts, but also how to add another layer um, to that with the option strategies that we like. And a lot of these aren't like a lot of the spread strategies we use. They're not, you're not going to hear it on CNBC, like call ratio back spreads. And that's one of the most powerful options strategies you can have. You can control stock, you control futures with much smaller amount of buying power and still have all the upside, and give yourself optionality where you can kind of make money either way and trade it around. So between that, and then I also give you access to the live options room where I'm putting in trades that I'm doing and having live conversation about where we see opportunities and how we're hedging risk, etc. I threw that in there also. So you have about $8,000 of value here that I'm giving away for 1/10 of the price, guys. So that's still available. Grab that while it's there. And then I have this vol edge product. This is great for anybody that's maybe a little bit more interested in what moves the equity markets as far as gamma, just the different exposures and how to play it between the futures, options, trading the VIX as far as call and put options, also trading Uvxy that had a big move this week. Actually, just even on Friday. So we're putting out signals on the VIX on that vol edge product. Yeah, here's Uvxy. What's that? I mean, this move, guys, this is just this. I've been trading this ETF for so long, and our win rate's about 90%. Nobody really believes that, but this just because the nature of this ETF, it always wants it naturally goes lower. Like it's just what it's designed to do is go down to the right. So there's so many retail traders that play this on the long side, and then the institutional guys that know how to trade vol just run them over. This is what that looks like on a Friday. So anyway, there's that there. That's the other option there on my membership site. But we can get into what we did Friday. I'll highlight this intermediate term pattern. Basically signaled long Nasdaq on Thursday, came in, cycled back to pi, sold it, signaled to sell it, and then with a good cover back down on the lows. But this is what's possible, especially when you're trading futures. This is an 85% win rate on the day. And I'm going to show you cyclically how I just time that up and then add it to it, which is key. So learning how to work the size will really help you. Okay, so this Nasdaq pattern, this is what I had highlighted just a second ago. This low, we come off of new highs. This is the all-time highs currently. You pull back, you make a pivot low, you bounce to the underside of the bands, and then this is what I call a 30 halt or a band halt. It's when price breaks the bands, these white lines, comes down, comes back up, tests the underside of it, and you can't make a new high. That spelled trouble for the bulls, and this was the pivot that mattered. And once that broke, you can see the size of this candle is much larger. That was enough to put you back to pi. So that's pretty standard in our model. When you break the bands, there's basically a move to the 200, typically, and or what I call full pi cycle. And that's exactly what played out. So this is the type of timing, and this is the type of process that we use and that we're talking about. And then you had a bounce to a lower high relative to here. Not surprised that then that produced another lower low, followed by another lower high. This is all how you define trends. And this right here, there was such a, my traders know this is what a wall concept right here off the low. And so after making that high right here, a lower high relative to here, the next move, this move with the cycle, the place for it's going to hold is here, which is the kind of what they call the inverse head and shoulders. but it's also about halfway of the move off the low. It's almost exactly halfway. That's a very high probability edge of where the market can hold or check up to find support. And once it does that and it starts to move away and creates that pivot, there's a higher probability that you take this high out and you go to a new high. And that's exactly what happened. Sometimes you'll fail here and you'll come back down and maybe make another low, or you'll go sideways. The point is not to like have to know what happens next. Oh, we held here means we have to go to a new high. I'm just saying that when that holds, the probability that you can pop above this high is higher. And then this was the other pivot that the market cared about, and we failed there. So I wasn't watching or trading this, but when we came in and the market had already rallied past this high to here, coming from here, very high probability setup that you're going to fail. So that's why we bought down here, sold into this level, and you can also see it was a pie line. I think maybe yeah. So just a great edge. You had the pie line, 200, all. That was an easy sale Friday. Okay, and now day trade, what we did was added to it between there's this little pivot here. I did it on S&Ps. I'll explain to you this and how to capitalize on this move. And this was the bulk of the gains were. Okay, so this is, let me just put some context around this. This is a 15-minute chart. So here's the high, right? This is the Nasdaq over here, but the S&Ps are basically tracking the same. So here's your high. Now you pull back, and now this is the context of this uptrend on the 5-minute, 15-minute. Here's your bands. These are where you got your higher lows, right? You hold the support, and now you bounce, and now this was the key. Just traders that only focus on price, they were going to be very enamored with this 39.30 level, right? But what I want to highlight more importantly was that the 15-minute cycle started to play out up in this area. And so I'm looking for the market to turn. Yes, could we make a new high? Absolutely. Yes, could you? Anything's possible. But at this point in time, there was a higher probability that the market might start to roll over. All right. And so the 15-minute cycle was kind of how I was timing up the 1 minute and 5 minute. And so the 1 minute will always roll over first, obviously, because it's a shorter duration. And you can see that here, the bands start to break. Sorry, no, this is not far enough out. It starts to happen back in. Here's 9:30, we rally. This is right here at pi, sorry, right in here. You can see how this is called the southern hemisphere. When you start to have pi line going this direction, the 200s going this direction, all the bands are going this direction. So here, uptrend on the 1 minute, 15-minute cycle starts to get high. And then as you start to roll through here, this is where you want to start adding to your short. So I was a little bit long, and then I started fading it. I was long Nasdaq in here a little bit. And then I'm starting to go contrarian short on my pairs trade, which happened to be S&P. And then I'm adding to my S&P. And this is what I teach you guys on the micro level and the prop room and the coaching stuff. But there's a ton of little opportunities to be what I call busy. So when we're wrong, you want to be wrong 1 or 2 contracts. When you're right, you want to be right 1, 2, 3, 4, 5, 6, 7, 8, 9. There's 10 times the amount of opportunity to be making money here on something where you try a long, you try a short, it doesn't work, you keep your wrist tight on your loser, you add to your winners, adding short, cover the lows, reshort, cover, reshort, cover, reshort, cover, reshort. This is why there's this amount of trades. What did I have? 46? 42 trades. 85% win rate. All right. busy on the short side there. And it was kind of a bummer for my guys in their live room because the morning open was kind of blah. But then by the time lunch rolled over, the sellers just came out and just kind of controlled the entire rest of the day. At least that the 15-minute, 30-minute cycle. So there's lots of teaching things in here within the context of this break and how to play it and adding and reducing on a near term. There's other ways to try to play the turn. I didn't play this turn just because it's late on a Friday, but there was other ways with it. The cycle was high here, then the cycle starts to get low here. There's other ways to start to play for a turn. That's contrarian trading. All that stuff we teach in our top team. And I teach in the model. All right, that was that, the J trading. And then lastly, Bitcoin looks great. This last pullback on the hourly chart was the 55,000. So let's see. I mean, if you guys want to trade this weekend, I would be a buyer down at 55 again. Almost pushed 58,000. You know, just keep playing these hourly and 4-hour cycles if you want to be a little bit more active on the near term and swing trade. 4-hour still can come in. Some other coins I've hit on. I mean, BNB I put out just an incredible move. Nothing to do here, guys, other than just take more profits. If you sold some up at 340, I mean, I guess buy some back here at 2 3/4. This 4-hour cycle is coming back in. I mean, I'm a buyer all the way back to 200. So if you're going to buy here, you want to buy a little bit lighter. You can be heavier down in the 160, 180, 200 zone down in here. But yesterday was obviously the day to take profits. I mean, it's just gone. This is definitely a chart that's going vertical, right? Pretty typical. And now we've retraced about halfway of that bar. You got the 8s coming into this 240 area. This would be the first spot to hold. If not, then you're going to get that. You're going to see that 160, 180 level. I haven't talked about Monero in a while. It looks good. I mean, everything is so extended that it's not really places where you can add aggressively. It's just more of like taking profit, trying to ride some winners, being patient. I guess kind of similar to Binance. This hourly bands here would be the first place to buy some back. I didn't get involved there on the new high, so. XMR, oh gosh, there's so many old ones. Neo. Somebody was asking about that. Still on an uptrend. Same thing, buy the bands. I like down at 50. Ethereum, great to see the futures trading. Ether, Bitcoin's been kind of leading the charge. Ethereum had kind of more of a stronger move at the beginning of the month, and now BTC is definitely kind of leading the charge, which is fine. So maybe we'll see Ethereum play catch up again. It's four days up, pushing 2,000. I would be taking profits here. It's not these aren't levels to chase. I'm going to get involved in futures at some point. This coin's interesting. I don't know a lot about it, but the backstory is hearing from my group was pretty interesting. Maybe you guys look into this coin. They had some issues on a different project that I guess they were involved with the regulators and did a deal, and some smart guys behind that project. But this is a fairly newer coin, and it based started to break out. So some of my guys are all over that one. Poly. Forgot Polymath did it. It's first BTC. Just exploding. There's DOT, and we were long and getting all over that in 5, 6, 7, 8. I wanted a pullback to buy more. I'm just holding on to longs now, but this is getting extended also. I would be taking, I'm going to signal that to my group to be taking some profits up here. We'll try to buy it back in the 30s. Don't lose your position though. I mean, why can't it go to 100, 200? There's no ceiling in crypto, so don't lose your position. For you Ripple fans, it's kind of a no man's land. I'd be a seller up 65, 70, 75, 80, and you get back 30s, 40 zone is more the buy zone. I think you're kind of stuck right in the middle on that. Bitcoin Cash is the one coin that I've always kind of wanted to play on the short side against my BTC long, kind of the only thing I think about pairs trading in crypto, and I'd be a seller here, Bitcoin Cash. Doesn't mean it's not in a bullish uptrend. It's just, that's one of the ways I've kind of played Bitcoin Cash. Litecoin, same thing. We had a nice wedge here, started to break out above 140, supposed to take profit on new highs. I'll be a buyer at 200, and then I'd be even heavier buyer at 160 to 140. Just trailing that out as well. The whole space is just, you're either long taking profit or there's not a whole lot to do, because if you're chasing to try to get long up here, you got to do it on the smaller size, because otherwise you're not going to be able to sit through a deeper pullback if it comes. Cardano has probably been my favorite for going back a long time. Wow, pushing through a buck. It's pretty historic. I like it. One of the best calls I made was down at 2 cents, saying this just might be the trade of lifetime, between 0 and 2 to buy all the Cardano you wanted a couple years ago. So still core long. It's been an amazing trade. You had a nice, see this real money candle here. Sometimes that bar at the end of a move can produce exhaustion, but you'll notice that price held within like the upper end. I mean, I don't know how much this traded here, but even we held the bottom of that bar. The point is, most of this price action stayed within the top half to a third of that candle. And now you know, you've obviously cleared that to new highs. So getting above $1. Yeah, it's probably got a lot more to go. So we'll continually to be buyers there, pullbacks. See if on the downside you want to watch par or dollar, and then if you break back through that, it's kind of 70, and then the bands that I care about. All right, guys, hope that helps. Have a great rest of your weekend. Let's try to get signed up if you want to take advantage of that trading package, jenkinscm.com. It's, you know, the crypto team has obviously been the best space for the last 12 to really 18 months, and just going to continue. And then if you just want to learn the model more, the thing with trading is, you know, you got to get education. It's always ongoing, learning more, but to have the training is really key. So many new traders come into the space and they think for whatever reason, trading, all they need is a broker account, and they're just gonna, and they're in business. Well, it doesn't work like that in any other profession, but trading has a 90% fail rate, and you're going against some of the savviest minds and big money, especially now in crypto. There's a lot of big players that have a lot of capital, and so to chase these high volatile markets and not really have a plan or a process or a model, you're going to pay one way or the other. So this is just an amazing deal. I've paid 12 grand just to learn Forex from a couple mentors. So this is like a no-brainer here, guys. And then obviously all the cyclical stuff too that we offer that you just don't get a lot of other places. All right, guys, have a great weekend. See some of you guys Monday morning.